So I do have my handy dandy PowerPoint to keep me on track. And then I could cover questions after. So let's share this. A lot of new agents get started with final expense insurance, whether it's bonus leads or doing the least expensive TLPA leads, which are like $9 or $12, depending if you're doing statewide or local. We have agents closing 20, 30% on them. So, a lot of it is if you're doing telesales, a lot of it is higher. You need a higher amount of personal skills to be able to sell doing telesales. Not impossible, but you just need to. You're going to need to amp up your game, which is okay, right? So you got to give yourself, the learning curve, time to learn how to sell over the phone. If you're selling in person, then closing rates are going to be over 50%, like 55%. So it's a lot easier to sell in person. But you can take this approach, this final expense, very specific to final expense. Okay, so you can take this approach and we use a Sandler approach, but there's Sandler in here. Sometimes a Sandler can be a little more involved than people, that's not advanced sales, but it's really where you eventually want to go. We kind of embed the process in this simplified approach to selling final expense. Okay, so I'm going to cover this and, really kind of give you some basics here. So let's go to the next slide. So why the final expense market? Okay, there's really some benefits to it. If you're wanting to get up and running in selling, learning to sell insurance, if you're, just wanting to get into the groove of making money, final expense insurance is a good way to go to get started. Okay, number one, retired people, typically, you're talking to retired people, they're home. Okay, it's a lot easier to book appointments with final expense leads than with mortgage protection leads or IUL leads. And typically you're gonna have to meet with people, unless they're business owners, then you can meet them with them during the day. But final expense, they're home. It's very simple options. You don't have to do all kinds of crazy different options. It's cremation, $2,500. You can do $2,500, $5,000, and $7,500 if they're on the lower income side, or you can be $10,000, $15,000, $25,000. That's it. I mean, there's not too many, or you can do well, that's pretty much it on final expense. Okay, there are renewals depending on the product. Okay, like I'm not a big fan of Mutual of Omaha because the renewals on their graded benefit is 0. And you take a massive haircut on the commissions. So I'd stay away from probably Mutual of Omaha, but on graded. But renewals, you can have lifetime renewals. Lead flow is really consistent. Mortgage protection leads are hard to get and they go in cycles. Lead flow for final expense is just really consistent because I think people consistently are dying, right? Mortgages that are being applied for go up and down according to the season. So here's some of the common mistakes agents run into when selling final expense. Prejudging the client. If you're doing in-home appointments, you look at the house, you don't think they have two nickels to rub together, but that typically is not the case. I mean, it could be the case, but typically, people want to make sure they got this taken care of. So don't ever judge a book by its cover, so to speak. The other common mistake is totally confusing clients. With clients for final expense, you got to keep it simple, man. Don't use fancy insurance language. Keep the product options simple, 3-option close, don't be getting too fancy with it. Don't call it whole life, right? Don't use the jargon whole life. Tell them this policy will be good till the day you die. Okay, that's what you're trying to communicate, that it's permanent. You'll never outlive this policy. As long as you keep making the premium payments, this will go on until you die. So you don't have to worry about outliving it, right? The other thing too is sometimes with older people, they're going to want to talk your ear off because they finally got someone to talk to, and they'll steal your time like crazy, and you're thinking that you're kicking butt on bond rapport. When you're spending time with a mortgage protection client or someone in their, mid 40s, mid 30s, selling them life insurance, that's where you maybe have to amp up your bond rapport game and spend more time with them. But seniors, and I'm getting there myself, right? Seniors just want to talk your ear off for no reason. And part of it is makes them feel better to tell you no, tell you they're going to think about it, right? So, keep it business. Don't go cross the line where you're buddy with them. Stay professional, create rapport so they trust you, but don't go overboard, right? The other mistake is you don't have enough leads to run enough appointments in a day. This is true whether it's telesales or in-home appointments. The frustrations of trying to squeeze out what you hope you can on the few leads that you're running, that you ordered and are calling. I'm just not a big fan of putting too much pressure on yourself. That's probably the best way to put it. You put too much pressure on yourself when you buy just 10 funnel expense leads, and then you're just like trying like heck to eke out 2 or 3 sales, when on 10 final expense leads, you're like wishing. Now, if you do 10 final expense leads every week for the next 6 weeks, you're going to get something out of those. Okay. But instead of 10 funnel expense leads for the next 6 weeks, why don't you do 60 funnel expense leads in a week, have a monster week, and then have the momentum to go into the next week. Okay, that's the idea. To have so many that you're pounding the phone. You're busy all the time. You are on the phone making sales. You're not on the phone constantly redialing the old leads you beat, the 10 leads you beat up, for the last 3 weeks. So that's one of the biggest mistakes. So let's talk quickly about lead management. And this is more of an in-home appointment scheduling mentality, but this also really applies to telesales too. If you don't have enough leads to do telesales, okay? So the frustration mode is on the left, the success mode is on the right. So let's say you have 30 Facebook leads per dial day, and this is a Facebook, it can be any leads, honestly, but these are A leads, okay? So if you have only 30 Facebook leads per dial day, so dial day is like Mondays and Thursdays. So this is in the lead grind mode of dialing on Mondays to book in-home appointments on Tuesday and Wednesday, and then you come back Thursday to book your schedule for Friday and Saturday. So this is more that 40 appointment a week mode, if that's the mode you want to be in. We have agents that dial on Monday for Tuesday, Wednesday, then they'll dial Thursday for Friday. Okay, and they keep the weekends free because that's when they want to spend time with their families. I'm cool with that too. Their goal is 30 appointments a week. The 40 appointment a week is, you do 10 appointments on Tuesday, 10 appointments Wednesday, 10 appointments Friday, 10 appointments Saturday. Now, if that's your goal, that's your goal. This is really the idea of trying to keep yourself busy for the times that you want to work, okay? So if you're only doing 30 leads per dial day, so let's say 30 leads on a Monday, for Tuesday and Wednesday, this is on the left. The typical way to manage your calendar is by the regions that you're working. So let's say you're working, a county over here, another county that's an hour the other direction, another county, that's another hour in a different direction, and then your own county, right? The most efficient way is not to zigzag every other appointment across the different counties. What you want to do is you want to group your appointments in a particular county or area, So, a good way to do it is on the mornings. Once you book an appointment in that morning of Tuesday morning, then you try to group all those leads that are in that county, and you try to book that Tuesday morning. Okay. And then when you book your first appointment in another county that Tuesday afternoon, well, then you call all those counties leads to book, fill up Tuesday afternoon. So you're only going from one county to the, county, the other county, you're just making 1 30-minute drive and then you're in that one county, right? Versus zigzagging. Okay. And then Wednesday, the same thing. Wednesday, you're, in one county and then you're in another county. So you're trying to minimize zigzagging. And the only way that you can control where you run leads when you're doing in-home appointments is having enough leads where you can create that synergy and efficiency. But if you're only dealing with 10 leads, you're just so grateful to have an appointment. You're going to not care that you got one lead over here in one county, and then the second appointment is 2 hours away. That's what you can end up doing if you don't respect your calendar, and you're forced to doing that because you don't have enough leads, right? You got enough leads, then and look here in this scenario, you got 30 leads. You book 8 leads on Tuesday in one part of the county, you book 7 leads. And if half don't pick up these are where they're distributed. If half the people don't pick up the phone, maybe you're booking 10 out of 30 leads, and then you're just in that situation. And those numbers there are really where the leads are located, right? And so you're only booking 10 out of 30, and then you're only going to be so busy for Tuesday and Wednesday, and it's going to be mega frustrating for you. Okay. Now, doubling the leads, now you've got plenty of opportunity. Now you're booking 20 out of 60, right? You're booking 10 on Tuesday, 10 on Wednesday. You have a full day, and you've got plenty of leads to segment your day efficiently by location. So do you see that the quantity is what matters to give you that flexibility? But if you're trying to just try to pound it little by little, you're going to get killed with, trying to make it happen. Okay, does that make sense? So lead management is a very important concept. So let's talk about telesales. Telesales, same thing happens. You don't have enough leads that you're pounding, and what you're trying to do with telesales is you're trying to really do the whole appointment on the first contact. Because when you book a telesale appointment into another appointment, then you're going to get killed with show rate. Like the best show rates are 50% on telesales, but it'll be as bad as 20% if you book an appointment out beyond 24 hours, right? You really got to book it within a few hours. Like if you're trying to in the morning, book that second appointment in the afternoon that same day. Try not to go beyond the next morning. You know what I mean? And so with telesales, you're all constantly on the phone. You're either booking appointments into free slots, or you're running appointments with your clients that are either you contact them on the phone or you booked them from the prior day or two. Okay. So the grind for telesales is you're constantly on the phone. Like if you're going to make 2-3 sales, plan on being on the phone 10, 12 hours. Okay. Now let's say, for example, it's kind of like fishing. If you got your 2-3 sales in the morning and you feel like blowing the rest of the day off because you got your goal, it's like, dude, seriously, you need to continue to work that 12-hour day. Because if you can book some more appointments and you make another 1 or 2 sales, because the next day working 10, 12 hours, you can get nothing, right? Remember, it's all about giving yourself opportunity by putting enough time in to get the good stuff to happen. But if you have that mentality, you're just going to work until you get your 2-3 sales that day, and it's going to kill you, because you're going to get super disappointed because the next day, you're not that good. You think you're so good getting all your sales in the morning. Then you're thinking, oh, I could just work mornings. I'll get all my, I'll make 2-3 sales a day. It's like, it don't work like that, gang. Come on, let's be realistic. Work when you've allotted the time to work. It's like treat this business like a job. All right, does that make sense? Okay, so let's talk about actually running an appointment. One of the biggest things in telesales or in home sales is bond and rapport, right? Now I've got hour-long videos on bond and rapport, like super detailed. Text me and I can get you into those bond and rapport training web pages, okay? But you have to be very much a great listener by asking questions to hear that the trust level has been built up, where you're calling them by their first names, you're finding out about their families, you're sharing stuff about you that builds bridges with them. And it doesn't got to take a long time, but you got to, in the conversation, get a feel for those triggers that signal trust. What are they? Come on, man. And you can get them laughing when it's a feel thing. It really is a feel thing. And the only way that you can earn that intuition is by running hundreds of appointments. So there's no way that I can't teach you intuition. Intuition is earned over hundreds of appointments. That's why it takes some time sometimes to get really, really, really good at this, okay? Now, bond rapport in home, super easy, way easier than bond rapport over the phone or on a Zoom call. You got to be very, very good at creating bond rapport. Again, you got to earn it. It might take you in the home. You have the advantage of being right there with them. You can read body language. You got all the visual cues. If you're doing it on the phone or telesales, you have very few clues unless you do a Zoom call. And Zoom call, it's such a closed environment. It's the screen, right? The screen right here. And you can't read the rest of their body language. You don't know the environment that they're in, right? The distractions they're dealing with, and you cannot control, right? So it's not impossible, but you got to give yourself time to learn it, okay? So look for the signals. You have to listen more than you talk, and you have to be totally aware of how the client's speaking, okay? So the way to get into it after you kind of have some level of bond rapport is that now you want to get into the pain finding. And this is really where you really assess their needs. And it's a very simple question. Pain finding with other types of insurance products involves a kind of a laundry list of, trying to figure out why they're looking for insurance. Well, the thing with final expense is why they're looking for insurance. It's final expense insurance, right? So you can go right to the specific pain questions that will be leading you down the road of making a sale. So Joe and Mary, when people fill out these forms and send them back to us, it's usually because of one of three things. Okay, so immediately you're giving them a menu. It's easy to ask questions when you give them a menu and you're searching for things. You're not leaving it open-ended, because your job is to get on and off the phone, not too quick, but you don't want to be on the phone forever, okay? So when you give them a menu, it makes it simple. So it's usually one of three things. They either have no life insurance. Number two, they have some life insurance, but it's not enough. Or number three, they want to leave a legacy to their kids or grandkids, okay? Which one of those three reasons are your reasons? Okay, which one are you? And then shut up. And when they tell you, find out more about that. Drill down a little bit more. Also, you want to leave a legacy for your kids or grandkids. Tell me about your kids. How many do you have? How old are they? Your grandkids. How old are your grandkids? What are their names? Like, get to know them. Bond rapport doesn't end. Okay, bond rapport continues throughout the entire process, right? So you don't want to overdo it at the beginning. You want to do it while you're in the real process of going down the road of making a sale here. They say, well, I have some life insurance, but I don't think it's really enough. Oh, interesting. Tell me about the insurance you do have. How much is it? How much coverage do you have right now? When did you get it? Who are the beneficiaries on your policies? Oh, your kids? Oh, okay. Your spouse? Okay, your spouse. Okay, and her name is, or his name is, get to know the spouse. Okay. Or they have no life insurance. Oh, wow, really? I'm curious, why did you wait so long to get insurance? Why is it important for you now to have life insurance? These are really key questions. That's why I recommend the book Asking Questions by, oh geez, it's a Sandler book. Asking Questions the Sandler Way. That's the book, and it's in the training website. But asking questions, those key questions, drill down when it gives you the opportunity to drill down on the pain side, okay? Super important. This drills down to more who's going to be left holding the bag. So Joe and Mary, paint me a picture. When you die tomorrow, not when, that's a kind of, when you die. Now, if you use tomorrow, okay, just say, should you die tomorrow, who has to pick up the pieces? Find out about them, right? And then use their name all the time. When they say, well, my daughter Martha. Oh, okay, Martha. How old's Martha? Does she live in your town or does she live away? Does Martha have kids? Oh, she does. What are their names? I want to know, man. Martha. Okay. So you put Martha in charge. Okay, great. And anytime I reference beneficiary, I don't say beneficiary. I say Martha. So what's Martha going to do? Okay. So you die tomorrow. What is Martha going to do to help raise the money for you? Now, typically, if it's a child, they don't have a spouse. So I started asking other questions. So is she going to have to come to your house and prepare it to sell it? Is she going to have to get rid of all your stuff, like come and go through all your clothes and your furniture and have a yard sale? And she's going to have to spend time doing all that? Does Martha work? Is she going to have to take off work? What is she going to do with the kids while she's here, especially if she lives in another state? I would drill the crap out of them with all the practical problems that Martha will have when she dies, and it amps up the need. Does that make sense? When you ask very key questions, the need just starts urgency. The pain, you're drilling down for the emotional pain of not taking care of this, right? So go through all the things. Like some of your debts that you have, is she going to have to pay those off for you? Like, is she going to have to keep the mortgage going, or is your house paid off already? Some of y'all who've gone through the process of having to dispose of a deceased parent's stuff, you know what I'm talking about. So this should be easy for you, right? See, here's the thing. We know their playbook. We know how these people think when they're looking for fun expense if they're seniors. They've all been told to watch for scams on the internet. That's why you have to share stuff about you, about your family. The best way of building bond reports is for them to get to know you. There's a great book called Never Split the Difference by Chris, what's his last? Chris Voss. And he talks about it's important for them to know you too. You need to know them, but they need to know who you are, that you're a family person, that that you have a family that you love, that you've taken care of with life insurance. Okay, so you want to be on their level to create that trust with them, so, and that sometimes you might have to text them your license, right? Or show it on the Zoom, We all know that they're on fixed income, they're on Social Security and pension. And so you say words like, look, they say stuff like I'm fixed income. Go, yeah, absolutely. Really, most of my clients are on fixed incomes. So what do you just say? Well, I've covered people that are on fixed incomes. So fixed income is not a problem, is what you're telling them, because most of my clients are all fixed income. So that's great. I mean, I absolutely understand that. We're going to give you options that are affordable. We're not trying to make this unaffordable, because if you can't afford to keep it, there's no sense in doing it, right? I've helped many people fit it into their budget, okay? And then a lot of them, they've had a term policy end on them, and they're not down with term. That's when they discover they have a term policy, is when it ends, and they're mad at their agent. Now, their agent might have explained it properly to them, but people forget. Like my clients that have bought term policies forget that it's term. 15, 20 years when we're talking about having to, find another policy for them. Well, Alex, I thought it was one of those policies that would last my life. I go, okay, let me go back to my notes. That's why I take notes. Remember I told you this policy is only going to run for 15 years? And that if you still need an insurance, I'd come back and help you with another policy. That's the situation we're in now, Joe. Okay, so my notes, okay, I must not have remembered. Even if I did an annual review a year ago, they just, it's just they don't remember that. So remember, they don't like policies that end on them. And then those same term policies, in order to keep it going, they got to pay a larger premium every year, annual premium to keep it going. And they don't like that, So they've had policies that go up every year. They have policies that decrease in death benefit, like those old mortgage protection policies that decrease in death benefit. Some of the retirees have, like GM, their retiree insurance, it drops down to 50% at like age 75, and then it decreases till age 85 where it's zero. Okay, that's the GM retirement life insurance. Okay, and a lot of them didn't know that that's how it is. That's how it is, and there's a lot of ways, and then we all know that they watch TV and they watch Alex Trebek, which he's dead now, I guess, but someone hawking their accidental death policy, and they have all these things. So you're competing with what they already know about, price never goes up, benefits never go down. So, I mean, that's our same thing. We got to communicate that with them. And how we communicate with them is just run through all those things. So Joe and Mary, look, just so you know, I want to make sure you understand, what this policy will do and what it won't do. Okay, does that make sense? So let me explain it to you. This policy is good until the day you die. So it doesn't end when you hit 80, 90, it's still going to be in place and in force. And you hit 100, you're going to get the full death benefit where you can actually have it. Okay, so it's good until the day you die. Then this is where I ask questions. Have you ever had one of those policies that run out on you? Oh, really? Did you know it was going to end? No, I didn't. Oh, man. Well, let me guarantee you that as long as you keep making the premium payments, this will go the rest of your life. Or we can actually set up where you get it all paid off in 7 years or 10 years, and then you don't ever have to make a premium payment again. So that's another option you have. Okay, the rate will never go up. There are policies out there that goes up every year. Have you ever had a policy where it kept going up every year? Right? Oh, man, really? You had that? Yeah, we don't like those. We don't sell those, but here the rate will never go up. Now, the death benefit will always stay the same. It won't decrease. Have you ever had one of those policies that decrease over time? And then finally, Joe, Mary, have you heard, those TV things where you watch on TV and they tell you, you can get $100,000 for $10 a month, for 50 cents a day or whatever. Have you ever heard those? It sounds just totally outrageous. Okay, well, let me just clue you in now. Those are what we call accidental policies. And you know that accidental death for seniors your age is like number 5, number 6 on the cause of death. The top 3 causes of death are cancer, heart attack, and stroke. Okay, accidental death is like number 5 or 6. So that's why those accidental programs are attractive and why they're so cheap. And typically when you answer those ads, when you call them on the phone, it's the typical bait and switch, because they'll tell you, well, as we said on the commercial, you can get that $10 rate, but it's accidental. Now, are you interested in a policy that'll go the rest of your life? Okay, great. And then they switch you to one of these type of policies, the whole life policies, the policies that won't end. Okay. Have you ever heard those? Have you seen those? Yeah. Okay, boom, you've addressed those 4 issues. Okay. So now, once we get them to the point where they understand it, then we go into the process of addressing the budget issue. Okay. So we've gotten their pain. We've gotten them educated on what we're going to show them. We've set them up. Now it's like, okay, now, Joe and Mary, my job is to get this into your budget, right? Look, if you can't afford this, you're not going to keep it. So when you decide on one of these premium options, that you feel comfortable with, that you can make the payment. Okay, I'll fix that sentence. So when you decide on one of these options to make the premium payment, we want you to make sure you feel comfortable that you can make that payment, okay? So if you don't feel comfortable, let me know, okay? We're not trying to stretch your budget here, okay? It's about you being able to afford it. Does that make sense, John Mary? So I'm gonna do everything I can to fit your budget. Okay, you cool with that? I'll wait for them to say yes or no, okay? And then the next step is addressing, this is the close. The close happens here, and that's closing the decision process. When you close here, you close the sale, my humble but accurate opinion, okay? So, Joe and Mary, all we're gonna do today is find the right program that best fits your needs and budget. Then we're gonna fill out a request for coverage form, because man, you guys are such a wonderful couple. I would love to approve it, but I can't, because the insurance carrier is gonna, we have to send it in to see if you qualify, and they're gonna determine whether or not they're gonna approve you or not. So really, today is not a day to tell me you wanna think about it. Because honestly, Joe and Mary, there's nothing to think about until we know you qualify. See, the insurance company has to think about you first. Okay, does that make sense? So all we're gonna do today is just figure out what you can afford, the benefits that'll be good for you, and then we're gonna fill out a request for coverage form to see if you qualify, okay? Now, if the company does decide to cover you, then we'll get the policy in the mail, right? And then we get to decide, I'll call you. And then at that point, we can think about it. Okay, you can think about raising the coverage, lowering the coverage, or leaving the coverage the way that it is, all right? So that, to me, is really the key to giving them the expectation that all we're gonna do is just put an application through, but they're going to keep it. I don't say they can cancel. Notice, I never said they can cancel a policy. I just said we can raise the coverage, decrease the coverage, just keep it the way you wanted it. Remember, the way you wanted it. Again, it further anchors in their mind that they made the first decision that they want this. So we're gonna, again, reinforce the decision that they wanted it at that appointment, okay? Because earlier you said, it's not, think about it. Then we tell them you can think about it once you receive it, but we don't tell them they can cancel. Does that make sense? So it's a strong close, or leaving it the way you wanted it. It's whatever you want to do. We say that to give them full control, to make them feel they're in full control of everything that happens. People want to know they're in control, not some slimy salesperson that feels like they're controlling everything and making them close. We are nurturing, we're asking questions. They're coming to this decision because we put the guardrails up on their decision process by asking questions where they walk down the road that we pay for them. Does that make sense? By the questions we ask, okay? Are you good with that? They have to agree. They got to fully agree with what we're going to do. And here's where we close the sale. Okay, we close the sale. Now it's all the monkey stuff, right? Okay, so Joe Mary, I want to reconfirm your medications and your health, blah, blah, blah. And then you go to the underwriting tool and you type all that stuff in, medications and health, and you find the carriers that will cover them. And then you put together your 3 options, okay? Okay, here are the 3 options I have for you. And I go from high, medium, and low, okay? Because I want to test their reaction, okay? And I tell them right away, it's like, look, we can come up with other, options. I'm just going to lay out, the different benefits, okay? And then I'm going to tell you what the premiums are. And then, if you want something in between, we can do that. If you want more, we can do that. If you want less, we can do that. I'm just going to throw out 3 so we can get started. Once I laid it out for them, okay, which one works best for your needs and budget? And then I shut up. I don't say a word. I let them speak. I don't speak. I let them say. They pick one, and then I'll say, okay, now that $125 a month program, you feel pretty good about that? I mean, that's something, you can make that payment from now till the day you die to make sure that Mary is covered, or your daughter Martha is covered, or use the beneficiary name, okay? And have them tell you again, yes, that'll work. Okay, now you sure that the $95 one might be better for $7,500? No. I want 125 for the 10,000 will work. Okay, great. Man, I want to just nail it down. I don't want to walk away with not feeling like I did everything I could to make sure that they're comfortable with this, because I hate chargebacks, right? And then after that, we write it up on electronic application or paper app, whatever you want to do. We get the IRS referrals. Okay, I'm not going to go into that, but this is where when you're writing up the app, that's when you get the IRS referrals, their emergency contact list referrals. All right. And then the post sale. So after everything's done, everything's buttoned up, signatures are taken care of. Okay, Joe and Mary, do you feel comfortable with the $124 a month premium to provide for Martha, your daughter, with the money to cover your final expenses? Shut up. Do you feel comfortable with that? Again, I'm tying it down. I'm closing their heart. And then I do it again. I'm a freak when it comes to tying it down. So summer vacation's coming up, or Christmas is coming up. You'll probably have pay a few more bills. So when you see this $125 being drafted out of your account, are you going to want to call me to cancel the policy? Then you shut up. If you hear a hesitation, and it's the hesitation beyond understanding what you just said, hesitation, because sometimes there's like a delay from when they hear it and when they process it. But if there's a hesitation, I'll go, well, you know what? You sure that $95 a month might be a little bit better for you? And I try to be the pressure release valve. So I release the pressure, and if they take it, they go for it, they say, yeah, the 95 would be better. Okay, well, look, Martha's going to get $7,500, and that, on a, modest funeral arrangements, that should be perfectly fine. I want to reassure them that that's okay. It's okay to pay less if you can't afford it. I make them feel good about their decision. I don't try to upsell them. Remember, this whole thing, I'm trying to downsell them, okay? Okay, great. Let me know if the policy is approved. Okay, great. I will let you know if the policy is approved, if the policy is approved, and then when to expect it. It should be mailed to your house. Now, look, if it's not approved, I'll let you know that too, and then I'll call you back and give you some other options too. You good with that? Any questions? Okay, but it doesn't end. Post sale doesn't end there. One last one. Now, look, Joe and Mary, I know you're going to have questions that come up. So in a couple of days, I'm going to give you a call, just make you feel, like I can answer your questions and so on. Okay, so what I want you to do is make sure that my phone number is in your smartphone, in your address book. Let's put it in there, and let's not put it under my name. Let's put it under Insurance Man. So in the first name, put my MY, and the last name put Insurance Man. Okay, my is your first name, Insurance Man is the last name. Okay, here's my number. Okay, then under the notes you can put Alex, the Insurance Man. Okay, so when I call, you're going to know it's your Insurance Man. Okay. Okay, cool. So I'll talk to you then. Now, why do you call them back? Because you want to capture buyer's remorse. So you call back a couple of days. Hey, Joe, Mary, it's Alex. Remember, I promised you I'd give you a call. I just want to see if you have any questions, anything on your mind. What, you guys feel comfortable with this? Blah, blah, blah. What you're looking for is the hesitation. Like what you're looking for and fishing for, what you want is, well, Alex, Mary and I were talking about this, and that $125, and We just, you know, and I go, say no more. You know what? I walked away and I was feeling maybe 95 was going to be better. Is 95 going to be better for you, that $95 option? Oh yeah, that's going to be way better. Okay, you know what? Look, I got some time today. I'm going to stop on by your house, or I'm going to call you around 6 p.m. Is that cool? And then let's redo this and fix it. Okay. Talk to you then. Boom. You're looking for buyer's remorse. Remember, this is all about placement persistency, gang. You don't make money until the client takes the policy out, pays their first month premium, second, third, fourth, fifth, sixth, ninth premium, 10, 11, 12. You get your full commission. Then your renewals happen when they renew it every year. Okay, so you want to make sure that they feel comfortable with it. Some people go, well, Alex, if I call them, they're going to cancel. It's like, dude, it's better to know up front so you can give them options than finding out they canceled later. You're holding your breath. I never want to hold my breath when I'm selling a final expense policy. Does that make sense? So there you go. From beginning to end, from moon to tomb. That is it. I hope that made sense. And you are nurturing the client all the way through so they feel good about you, right? Whether you're in the home or on the phone, they feel good about you. They feel that you care because you use their first name. You use the names of their children, their beneficiary, right? You care about them because you really care about them, and you try to downsell them so many times over the course of the thing. It's like, wow, they want to make sure I can afford it. They must really care that I keep it. Yes. Does that make sense, man? So, gang, that's it. Any questions?